Hello, everyone. I'm Mark Masterson, and here is this week's market update with Foundation. So, the big news coming out of last week was the commentary from Federal Reserve Chairman Powell that the central bank is expecting to hike rates further this year after central bankers held its policy rate unchanged earlier this month. So it's a bit of a change from earlier in this year where they thought there would be rates dropping towards Q4. So it looks like there are going to be more rate hikes coming our way. He just basically affirmed that there's going to be more interest rate increases ahead as inflation is well above where it should be. And so inflation pressures continue to run high. The process of getting inflation back down to 2% has a long way to go. So the pause from this past month signals that inflation is cooling. They are staunchly focused on really getting inflation back down to 2%. And if they'll raise rates again, they'll do it. So they're also focused on the labor market. So something to keep in mind as it relates to us. As Sean will mention a little bit later, we've seen a little bit more volatility than we've been accustomed to the last couple of months on our DSCR product as rates go up and left, and there's a little bit of changing sort of credit policy behind the scenes. But we'll get to that in a bit. Again, it'll be on a meeting by meeting basis. So something to keep in mind, the market now points to nearly an 80% probability of another 25 basis point rate hike at the July 25th, 26th meeting, bringing the federal funds target rate to 5.25 to 5.5. So there, switching over to real estate news, sort of the big couple of pieces of news driving today so far are the Case and Shiller Index report was released, and home prices rose for the third straight month, but they're down year over year. So by a range of 20 basis points nationally to 1.7% for the 20 city composite index. On a month over month basis, home prices were up 50 basis points. So perhaps I'm bottoming out and turning the corner here on valuations dropping. And home prices now on a national sort of index are just 2.4% below their June 2022 peak. So interesting there. And then kind of the big sort of headlines there, and you can read the article in more depth later. But Miami was up 5.2%. Chicago is up 4.1%. Atlanta was up 3.5%. So they took the top three spots. And then the Western markets of Seattle down 12.4%, San Francisco down 11.1%, Las Vegas down 6.6%, saw the largest decline in prices. So there are some tie-ins to tech there and what's happening there. So other big report, new home sales surged 20% in May from a year ago. So year over year up 20%. Really kind of breaking down the numbers a little bit. Sales of newly constructed homes are up 12.2% in May from April and up 20% from a year ago. May's month over month gains further evidence that the new construction market is being sort of bolstered by the really exceptionally low inventory of existing homes for sale. So existing homes, this lack of inventory is driving pricing right now. It's also pushing people over to buying new homes. The median price for a newly built home dropped to $416,000 in May, down from a revised $487,000 in April. So interesting trend. Prices are getting lower. I don't know if that's concessions, but as more and more articles come out, we'll see. Moving along to the rental side, CoreLogic released their single family rent index report. And this also shows a really sort of cooling rental market. And when I say cooling, I think it's more, if you think about things in relative figures, it's actually coming back into historical norms as compared to the explosive growth we saw last year and the year before. The U.S. single family rent increases dropped on an annual basis for the 12th consecutive month in April, just registering a 3.7% gain, which again, in normal historical times is right on par with kind of 3% annual rent growth, actually above it. Comparatively speaking, though, April 2022 saw rent growth of 14.2%. So that's not sustainable. Obviously, there's a lot going on with COVID, so a little bit of an outlier. Pretty much everywhere saw marginal rent increases year over year, except for Las Vegas, which recorded a decline of just under 1%. And, more or less the economists of CoreLogic are just pointing out that single family rent growth is approaching kind of normal gains that are pre-pandemic rates. Interesting term to start probably using is pre-pandemic times as opposed to pandemic and post-pandemic times. And last but not least, worth digging into later, but some highlights. Adam released its first quarter Q1 2023 US home flipping report, and there's definitely some bright spots there for all of us and our investors who may have taken a pause in the latter half of last year to kind of see where things are going, who've jumped back in. So nearly 73,000 homes and condos were flipped in the first quarter of this year, representing 9% of all sales, up from 8% in the fourth quarter, and sort of the highest figure as they've been tracking it so far in the 2000s. Another kind of point that ties in with how we use our deal calculators, profits and investment returns both increased slightly quarter over quarter in the first quarter of this year. The quarterly gain, according to the report, typical profit margin was 22%. So a little bit of a reversal here. We've saw declining profits over the previous few quarters. So they noted a kind of the good sort of takeaway quote here was in the first quarter, profit margin showed a slight upward turn after an extended slump. While interest in flipped homes continue to rise amongst buyers, however, investors shouldn't assume they're out of the woods yet. Noting basically home flip carrying costs on projects that have gone long and over budget can easily erase a 22% return on gross profits. So basically, it looks like investors are turning the quarter, and those are able to get kind of deal flow locked up or are hitting their numbers. The median $305,000 resale price in homes flipped nationwide in the first quarter generated a gross profit of 56 grand. So, again, kind of right in that target bucket of the $200,000 to $400,000 homes. Investors continued to earn the highest profits in the South and the Northeast. And another interesting stat, which still kind of shocks me, is nearly 2/3 of all homes flipped in the first quarter were purchased by investors with cash. So something definitely that keeping an eye on, whether it's people have to move quickly or whatever it may be, or maybe they're still kind of in shock of rising interest rates when they were pandemic and pre-pandemic. But the other two big takeaways here is that the average time it took to purchase to resell at homes flips rose to 178 days. So, just shy of 6 months. It's something to take into account when we're running our calculations on our deal calculator on behalf of our customers, ramping up that hold time a little bit further and looking at the sensitivities there.